Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Simon King of Octopus Ventures to talk about the Octopus Ventures EIS. Hello Simon, welcome to the studio. Could you start by giving us a bit of background to Octopus Ventures and your own experience?
Of course, yeah. Well, thank you for having me here, Jonathan. So I'm part of Octopus Ventures, which is a team of more than 90 people investing in early stage, high growth potential companies. We have more than 2 billion under management and have been investing together for the last 14 years. And I joined the team 11 years ago from a background as an academic. So I studied physics and chemistry and then moved into the fund shortly thereafter. And with the team, I'm responsible for our deep tech investing. So that's investing in enabling technology companies, things like quantum computing, robots, drones, AI and machine learning. But I sit alongside 35 other fantastic investors who all have different specialisms, and we invest in everything from fintech, health tech, consumer technology, B2B software companies, climate tech and deep tech.
And so we're here today to talk about the EIS offering. What does it aim to do for investors, and how many companies can investors expect in their portfolio?
That's right, yeah. So we have two different offerings in Ventures EIS. But really what we're aiming to do in both cases for investors is provide a really exciting opportunity to invest in a pipeline of the UK's fastest growing privately held technology companies. So we offer the opportunity to co-invest alongside some of the other funds that we have, including Octopus Titan, which is a venture capital trust fund, in fact the UK's largest VCT, that we've been investing for the last 14 years. And so those two offerings, one is an evergreen EIS service, which is open year round. And the second is a knowledge-intensive EIS fund, which is time and capacity limited. And really the difference between the two for investors is the timing of the tax relief. So with the evergreen service, tax relief is found when each individual investment is made, whereas for the knowledge-intensive fund, tax relief is found when the fund closes. So slight nuances for investors going into each of those.
Yeah. And what are you looking for in an investee company?
Yeah, well, we invest at some of the earliest stages of a company's life cycle. And so for us, the most important thing about these businesses is a fantastic management team. We're looking for people who are capable of growing companies from small numbers of people and low single-digit million valuations up to being some of the largest companies that the UK has seen. And to do that, you need a special kind of person, a special kind of founder set who are going to persevere against all the challenges and all the odds. And they need to really understand the market and problem that they're tackling. So that's number one for us. Second is a big market opportunity. And when we say big, we mean market opportunities that are worth billions. So we're looking for companies that can grow and scale to be worth hundreds of millions, if not billions, by the point that they're big and successful. And to do that effectively, they need to be tackling really big problems, which means really big markets.
Are there any particular sectors that you're looking for with those companies?
Yeah, so as I mentioned, we look across a range of different sectors, and actually our team is split down into 5 separate sub-teams, each of which has a specific sector or vertical focus. And they are a fintech team, a health tech team, a consumer tech team, a B2B software team, and a deep tech team. And actually, overlaying all of those, we also have a climate tech focus as well. So each of the subgroups is looking at climate tech opportunities as well as their specialist area.
Okay. And could you give us some examples of recent investments you've made in the funds?
Yeah, of course. So one we made earlier this year is a business called LifeScore, and they have an algorithm that creates music adaptively on the fly. So it was founded by 4 amazing individuals, so an ex-executive from Arm, a professor from the Royal Academy of Music and one of the original founders of Siri, Apple's executive assistant. And what the algorithm can do is essentially take inputs like your heart rate or weather data and create music continuously on the fly. So they can create kind of infinite varieties of this music with applications ranging from fitness. So let's say you're doing some training, you want to step up the tempo. The algorithm recognizes that you're running faster or you're cycling faster, and it can provide a higher beat and tempo for you to work with. All the way through to wellness applications or even in transport. They have a fantastic demo you can watch on YouTube of where they've worked with Bentley, taking the car sensor data to create music as you're driving. So it starts raining and the music changes.
Any other examples?
Yeah, we also invested in a business earlier this year called Foodsteps. And Foodsteps has built a platform to help food service providers and brands understand the carbon impact of the food that they create and sell. So it's founded by a Cambridge academic who's done work with the UN, and she built this business really to kind of provide food service providers and brands the data that they need to pass on to their end consumers, who are increasingly savvy about the carbon intensity and carbon impact of the foodstuffs that they eat. So one of their longer term goals is to provide a kind of red, amber, green stamping type system for the foods that people buy. So you can look and, if you see at the moment, this one's got too much sugar, this one's got too much salt. Well, look, actually, this one also has a really high intensity carbon impact. And so maybe I'd prefer to buy this one, which is locally sourced and therefore, better for the environment.
Yeah. So how do you source these investments? Where do you find them?
Yeah, well, so we've been, as I mentioned, investing over the last 15 years, and we've built up a network of different investors, angel investors, service providers who we have built relationships with and who know what type of things we like to invest in and are able to send them to us. So we see about 3,000 businesses a year. A number of those are also cold approaches because the brand that we've built up over that period is such that people are now seeking us out for investment. And from that 3,000, we refine them down and invest in something like 30 to 50 businesses per year.
So how much are you typically investing in each of these businesses, and what's the typical round size?
Yeah, of course. So the range of check sizes we write is from 1 million at the low end to 10 million at the high end. Typically, we're investing somewhere in the middle. I would say average is about £4 million over the last 18 months or so.
Okay. And how many companies per year are you investing in?
So somewhere between 30 and 50, depending on the year. And I think for the Ventures EIS Evergreen service, we're looking at somewhere between 10 and 15 companies for a particular investor in any given tranche of that service. And it's similar, although maybe 10 to 20 companies for the knowledge intensive fund.
Okay. And all the funds that you manage invest in the same companies?
That's correct. So the different funds and services that we operate will all co-invest together, depending on whether those investments qualify for each of the different funds that we invest.
Sure.
But yes, broadly, we're finding great opportunities and then offering them up to the funds, and depending on the fund's criteria, they will be able to invest in some of those companies or not.
Okay. So changing topics slightly, the current environment's becoming a little bit more volatile, particularly for growth companies.
Yeah.
Is that affecting the way you invest?
Definitely. It would be crazy of us not to take into account the kind of macroeconomic situation when we're looking at some of these businesses. So a few of the things that we're doing, in the first instance, I don't think anybody knows how long this period is going to last, or what next year and the following years are going to bring. And so we're thinking about how can these companies support themselves for longer on the cash that they're raising at the moment. But on the flip side, this is also an opportunity for investors at this stage. We've seen valuations contract pretty significantly from last year down into this year, which means there are great opportunities out there, if you're willing to go out and look for them.
And how is it affecting the companies you're backing?
Yeah.
I suppose we've seen with technology, potentially lots of layoffs planned.
Yeah. So again, lots of opportunities actually. It's a real shame for many people to lose their jobs, but it's also an opportunity for them to start that next thing. That itch they had at the back of their mind to create a new company. Well, actually, when they had a steady wage and weren't pushed to do that, it was harder for them to jump into a new thing. So actually, in periods of economic downturn, we see lots of new companies created, which is great. At the same time, while there are lots of layoffs, that means that the companies which we've invested in, which are hiring furiously to take advantage of the opportunities they see, they now have access to a fantastic talent pool. So I think there's lots of opportunities for the companies that we're investing in.
So Simon, are you seeing that happen now? Are you seeing people who've been laid off approach you to start up new businesses?
Absolutely. I mean, one of the things that we do for our portfolio, and it's relatively unique to Octopus, is we have a team of 6 dedicated talent partners for the portfolio. And it's their job to help the companies with all their kind of HR needs. And that's everything from, how do I structure a team and who are the best people to hire and who are the best recruiters out there for this particular industry that I'm working in. But one of the other things that they do is they help to centralize some of the job applications that our portfolio companies have put out there. And they're also a great conduit for, big tech businesses or big businesses that are laying off folk to come to and say, look, we've got this list of X number of people. We think they're all fantastic, but we can't afford to keep them at the moment. Can you help us find roles for them? And so they can take those lists and go out to portfolio companies and say, look, guys, here are some great people. Unfortunately, they're not going to be able to stay with the company they're currently at. Do you want to hire some great people? If you do, let's facilitate some introductions.
So a good bit of active added value
Absolutely.
happening there, potentially. I guess it's probably too early to talk about exits within the EIS portfolio.
That's right.
Perhaps the wider Octopus Ventures portfolio.
Yeah, the wider Octopus Ventures portfolio, we sold a number of businesses last year. I think earlier this year we sold a business called BehavioSec, which was in the cybersecurity space, doing kind of behavioral biometrics, which means today if you're typing your password into your phone, then your phone believes that you are who you say you are as soon as you've typed your password in. But in many cases, if somebody else has access to your password, once they're through that gate, they can access everything. Whereas behavioral biometrics means that you're constantly analysing how a person is interacting with their device, which applications are they going to, and just keeping a kind of low-level monitoring, which is really important for things like banks, for example, so that if you get the feeling that actually maybe this person is not who they say they are, they've managed to get access through a password, but on an ongoing basis, they may not be the person who should have had the password and be interacting in that way. Then you can challenge them again and make sure that they actually are who they say they are. Oh. So we sold that business earlier this year.
So Simon, how risky would you say your part of the market is in investing in EIS in general?
Yeah, so we're investing in early stage, high growth potential companies. All the companies we invest in are not making profit at the point that we invest. In some cases, they're not even generating revenue yet. And so it is high risk. The best performing funds in the market still lose money on somewhere between 40 and 60% of the investments that they make. But the nature of investing at this stage is you can lose your money once, but in the winners, you'll make it back multiple times. So we're targeting a 10x investment return on initial investments in companies. And so we make sure that when we're seeking out and investing in these companies, they have the potential to become significantly valuable companies.
I suppose it's worth noting as well, 10 times target return on initial investments, but you also make follow-on investments within
that's right.
EIS fund.
Yeah, so over a blended set of investments, the return may be lower than that.
Yeah. And is there a typical split between new investments and follow-on investments within an EIS, or is it really deal dependent?
It's really deal dependent. So we will, in most cases, be investing in companies multiple times throughout their life, but whether a specific evergreen tranche, for example, is investing in new companies or a combination of new and follow-on will really depend on the investments that are being made at that point in the year.
Okay, makes sense. So to sum up then, Simon, for those who want to invest in an EIS fund this year, Why should they invest in the Octopus Ventures EIS?
Yeah, well, so at Octopus Ventures, we've been investing in venture capital stage, so early, high growth potential companies for the last 15 years. And over that period of time, we've built a team and a set of systems and processes and understanding about how to find the best companies, how to decide which ones to invest in, and how to support them on their growth journey, and ultimately how to help them exit, that I think puts us in a different place than many of the other investors that are providing similar types of service. At the same time, we've been building our brand and reputation over that period by investing in companies that have gone on to be successful and, in many cases, household names, the likes of Zoopla, the likes of Cazoo, the likes of Secret Escapes. And that means that the best entrepreneurs in the UK will now seek us out when they're looking for their next round of funding. And so through the Ventures EIS offerings, we provide investors access to the exciting pipeline of companies that generates.
Simon King of Octopus Ventures, thank you very much.
Thanks so much.
If you are watching on YouTube, please press like and subscribe to the channel for more.